Hi guys, it's Upeksha Pinto here from Learner Academy, here to teach you about errors in trial balance. So before I go into the errors in trial balance, let me explain you what is a trial balance is basically, guys. So I have taught you all about accounting and bookkeeping, and I told you all under bookkeeping, the last and final thing a bookkeeper does is about preparing a trial balance. So what do you mean by a trial balance is after you prepare your books of prime entry, after you prepare ledger accounts, you add up all the ledger balances, right? That means what is your total administration expenses? What's your total discount received for the entire year, right? So we sum up everything and put up into something called a trial balance where you have a list of your ledger balances. Then when you are writing about your advantages of preparing a trial balance, we write it as what? We write our advantages as it checks the arithmetical accuracy of the ledger, right? That's what we write usually. But does it mean that all the errors are 100% verified using a trial balance? No, right? Because once we take a trial balance, we just check the numbers where your debit and credit, if it is equal, we assume it is all good, right? But even though it is balancing, there'll still be errors, right? So we are going to learn about what are those errors and how do we correct it, right? So in my first recording, which is the one that you all refer right now, is going to teach you errors which does not affect the trial balance, which means even though your debit and credit side is balancing, you will still have errors in the trial balance. So we are going to figure out what are the errors such and how do you correct it in a books of accounts, right? So errors which do not affect the trial balance, you all have seven types of errors, right? Error of omission, original entry, complete reversal, commission, principal, compensating, and transposition, right? So we are going to identify each of this and see how are we going to correct this. So remember, if it is not affecting trial balance, so that means I'll put a star mark here. Since these errors are not affecting trial balance, suspense account is not required when correcting these type of errors, right? You will understand this better once we start questions, right? So just for the moment, understand we have seven types of errors to learn, and these errors doesn't require suspense accounts in your double entries. But if there are errors which is affecting the trial balance, that is my second recording. So over there, of course, you will have suspense. But here, when there's any error which doesn't affect the trial balance, it's not gonna be requiring a suspense account, right? So we'll go for the first error, that is error of omission. And this is the easiest out of everything because, guys, error of omission means it's completely omitted, right? The transaction is completely forgotten. So how do you correct it? Is recording your fresh double entry. That means just read the question, write the double entry, that's it, right? Nothing hard to think of. Omitting means you have just simply forgotten the entire thing. So that, as well as you see here, the transaction is omitted. The transaction is not entered in the debit or credit side of the account. As I mentioned, either the debit or the credit is not entered. It's completely forgotten, right? So in that case, you're supposed to record the fresh double entry. So what is your step? Step to correct it. Record the fresh double entry. Simple as that, right? Recording a double entry will give you the correct answer in this case. So sale of goods worth 200 on credit to Kiha. So your selling means it's an income. So sales account is credited, right? Sales account is credited. And you're selling to whom? Kiha. You're selling to Kiha means Kiha is a trade receivable. Trade receivable is an asset. Assets are debited. So just a fresh double entry, Kiha account debit, right? Why Kiha debit? Because it's a trade receivable. Why sales credit? Because it is a income. That's how the double entry works over here. Then the next one, a payment of rent of 30 in cash was completely omitted from the books, right? A payment for rent. So what rent is an expense, guys. So expenses are debited. Rent account debit. And you're paying in cash. So once you're paying in cash, asset is falling. Asset falling is credit. Asset falling is credit. Then how do you record it? Rent account debit and cash account credit by 30. Right. So I'll write the amount also. Just the normal double entries. A sales invoice of 25 of Thomas was overlooked, right? So what do you mean by sales invoice? What do you mean by sales invoice? it is referring to credit sales made. The sales invoice is referring to the credit sales made. So in that case, they are telling here indirectly there was a credit sale made to Thomas, which is not recorded. So same as the first one, sale is a income, so sales account is credited by 25. And you're selling to whom? You're selling to Thomas, which is Thomas is a trade receivable, which is debited, right? So 25. I think error of omission is easy to understand because just recording your double entry is not a big deal if you all know the basics, right? So error of omission, did you all ever see suspense here? No, right? So if you all are having any errors related to the errors not effective trial balance, that means error of omission, commission, principle, and all the other seven that we are gonna learn, you don't find suspense just the way you saw here, right? So we'll go for the next one, which is error of commission. So we'll see what is error of commission. We'll read and I'll explain you all. It occurs when a transaction is entered using the correct amount and on the correct side of a wrong account of the same class. This feels like Greek for you, I know, right? So I have mentioned some star marks for you to understand better, right? So wrong customer's account, wrong supplier's account, wrong expenses account, right? Something like that. Same class. What are your classes? We have referred as five elements in accounting, right? It may be a wrong asset, right? Or it may be a wrong liability, a wrong capital, a wrong liability, right? Or a wrong income, wrong expense, right? You have the five elements now. So basically, this is easy to understand. For example, what do you mean by an error of commission is you sell goods to Diana, you record it in David's account, something like that, right? You have mistakenly recorded in someone else's account, but both are in the same category. Both are customers, both are suppliers, right? So same class means falling under the same category, which means you have two different customers. You have recorded in one person's one mistakenly instead of the other person. Or wrong supply. You have purchased from one person but recorded in other person's account. So both are suppliers, right? So same class but different account, right? That's what it means here. Then they have told here steps to follow in correction. This is what you should understand so that your answer is going to be pretty easy to do. Right? Undo the entry in the incorrect account, make an equal entry to the opposite side of the account, make an entry to the correct account. I know still you did not understand what exactly to be done. So let me explain you. I'll use some two ledger accounts to make things more understandable. Right. So goods sold on credit to Kiha for 200, but the entry was made in Dina's account incorrectly. Right. So I will use two D accounts to see for you to understand better. So the three accounts we need here is sales account, correct person is Kiha's account, wrong person is Dina's account. Right? This is the situation you have here. We'll read now. Goods were sold on credit to Kiha for 200, but the entry was made in Dina's account, right? So we have to first understand what's the correct double entry and what's the wrong double entry, right? So we'll write here correct double entry. What is my correct double entry? My correct double entry is what? I'm selling goods on credit to Kiha. That means it should be Kiha account debit and sales account credit. This should be my correct double entry. But at the moment, the situation is wrong, right? As you see here, they have made it into Dina's account. So incorrect double entry is there's no Kiha anymore. We have only Dina here. That's the mistake we have done. Instead of Kiha, we have put it in Dina's account, right? So we have debited Dina's account and credited the sales account. This is incorrect, right? Now it's our time. It's our time to correct this, right? So now at the moment, what do we have? We have put it this way. At the moment, we have put it this way. So we are going to correct it now. So for you to understand better, I'll do the mistake and show here what they have done. right? So sales they have credited as Dina 200. I'll just put the amount only, right? They have credited it mistakenly, right? And Dina, they have debited it as 200, debited. Sales credited and Dina debited. This is the mistake, right? This is a mistake at the moment. So now it's our time to correct this. What do we have to do? Make an equal entry to the opposite side of the account. Now this is the incorrect account. I have to make it to the opposite side of the account. So making on the opposite side means Dina account is going to be credited, right? Dina's account is going to be credited. So incorrect account is Dina's account. Dina's account is at the moment debited. So this is the incorrect account as you see here. Undo the entry in the incorrect amount account, making an equal entry on the opposite side. So Dina account is wrong. So I'm going to credit it. Right. This is my first thing I had to do. Right. This is my first thing I had to do. Then what's next? Make an entry in the correct account. So I must remove from Dina and put it to Kiha. So Kiha should be debited 200. Right. I'm removing it from Dina because that's the wrong person and putting it to the correct person, that is Kiha. Then what's my double entry? It should be Kiha account debit. That's my correct double entry. And I should remove from the wrong person, that is Dina. Dina account credit by 200. That's how you work around this. Then a payment of rent for 30 in cash was recorded in the rent received account, right? This is the mistake they're telling. Payment of rent, sorry guys, this question is wrong. A payment of rent of 30 in cash was recorded in the general expenses account, right? Is recorded in the general expenses account. So the question is, you have paid for rent, but you have put it on a general expenses. Both are expenses, but the account is wrong. So we are trying to correct it, right? So you have made a payment for rent, $30 in cash, but you have mistakenly put it on a general expense. And this is again error of permission because both are expenses, but the expense account which you have used is wrong. So we'll try to understand this also using 3T accounts. I'll draw here. So here we have cash account, we have rent account, and we have general expenses account. These are the accounts we have, right? What is the mistake again? I'll bring it here, then you can see it clearly. Okay, so you have this. A payment of rent for $30 in cash was recorded in the general expenses account, right? So we'll write the usual thing that we wrote, the correct and the incorrect double entry, right? So correct double entry is what? Correct double entry. What's my correct double entry? I am paying $30 in cash for rent. So it should be rent account debited by 30 and cash account credited by 30. But this is not what we have done. So there's an incorrect double entry also here because it's not the thing that we have done. Incorrect double entry is what? Instead of rent, I have debited the general expenses account. Right? I have done a mistake by debiting general expense account by $30. Then I have credited the cash account by 30. So cash account is all good now, guys. Cash account is to be credited, so I have done it correctly. The only problem is with the general expense account because I must put it on the rent, but I have put it incorrectly as general expense. So first we'll do the incorrect double entry here. Right? Incorrect is what? Cash account is credited by 30 and general expense account is debited by 30. So I told cash account is nothing wrong because either you pay for rent or general expense, both the accounts you have to credit anyways your cash account, right? So nothing to worry about that. But general expense, if you take, right, general expense is the wrong thing, no? So I must remove from the incorrect account. So you follow the steps. Incorrect account is general expense. You must remove the amount by putting it on the opposite side. So opposite side is over here, right? Opposite side is over here. And then you must put it to the correct account. What is my correct account? That is my rent account, and I must debit it because it's an expense. Because it's an expense, I must debit it, right? So how do you correct it then? I must remove from general expense, which means general expense account credit, and put it to the correct account, which is rent account debit, right? So I will write it here. That is rent account debit by 30, and I remove from the old account, which is general expenses account, credited by 30. Then the purchase of a computer, $200 by check, was entered in the machinery account, right? This is again a mistake because both are non-current assets, so same category, but there are different non-current assets now. Instead of putting it under the computer equipment, you have incorrectly put it under machinery. So we'll try to correct this also, right? So I'll bring the question here. And then I have 3 accounts. Okay, so purchase of a computer, $200 by check, was entered in the machinery account. So we'll first write the incorrect double entry, right? And then we have the correct double entry, incorrect double entry, and the correct double entry, right? So incorrect double entry is what? The correct double entry is what? First, we'll write the correct one. You're purchasing a computer, $200 by check. So once you're purchasing a computer, $200 by check, how do you record it? It should be, yes, it should be, once you're purchasing a computer by check, computer is an asset, so it should be computer account debited, and bank account should be credited because asset is falling once you buy. So computer is an asset, asset rising by 200, right? Because you are bringing it, but you are paying through cash, you are paying through the check, so bank balance is falling. This is the correct one, but you have done a mistake. Instead of putting computer, you have put it under machinery account, right? Instead of putting it as computer, you have put it as machinery account, right? So machinery account debited by 200, but bank account is the same, which is bank account credited. This is the incorrect and the correct double entry. So we'll try to put the wrong ones and the correct ones and use these T accounts. We have bank account, we have computer account, and we have machinery account. And that is how it works. So once you are purchasing a computer by check, it was entered in the machinery account. So we must first of all record the wrong entries. Wrong entries, I have debited my machinery by 200 and I credited my bank by 200. This is the mistake I have done, right? This is the mistake I have done. So we'll see how do you correct this, right? How do you correct this is basically bank is anyways correct, but I must remove from the machinery because that's my incorrect account. So I must remove from machinery. Remove means machinery account credit, right? Remove means machinery account credit. And then I must put it to the correct account. Correct account is what? Correct account is computer, which is 200 over here, right? Removing from the wrong account, putting it to the correct account. Then what's my double entry? I must remove from machinery. So machinery account becomes credited by 200 and I must put it to the computer account, right? Computer account must be debited by 200. Right? That is what you're supposed to do here. Then we'll go for the error of principle, right? Error of principle. It occurs when a transaction is entered using the correct amount on the correct side, but in the wrong account of a different class of account. The transaction for an expense could have been entered into an asset account, right? The steps are the same, right? The steps are the same, but you have to understand why it is called error of principle. Now, error of commission is what same class, but here it's different class. That's the difference. Different class means if it's an expense, you go and put it under assets. Or if it is a liability, you put it under income. Now, that was under the same category. I told same different customers, different suppliers, all are in the same category. But here, different categories. An expense you put under asset, a liability you put under income, right? Or you a liability you put under capital, something like that. A wrong category you have used, right? But that is error of commission is same category, right? So error of principle, how do you correct it is they have told you that's the same steps that we did before. Remove from the wrong account, put it to the correct account, and that's your double entry. Right? Simple as that. So first question, $50 was paid for petrol in cash, but the entry was made in the vehicles account rather than vehicle expenses account, right? What's the mistake here? They have put it under the asset account because vehicle is asset, no, instead of putting it under expenses. So this is what error of principle, wrong category. Then here, purchase of a motor van was entered in the motor expense account. So it is again a mistake. It was asset you brought, but you have put it under the expenses, so different category. Then here, sale of office equipment was credited to the sales account. Now, sales account is an income account, and this is sale of office equipment, right? It is a non-current asset that you sell. So if you are selling a non-current asset, you're using something called the disposal account. So it's again different categories that you have done wrong, right? So we'll try to correct it one by one. So just as before, we want a T account. We'll have it here. Okay. Then we have to look at the question. So I'll copy the question here, then it's easy. $50 was paid for petrol in cash. So we need cash account. We need the petrol account. And we need, they have told $50 was paid for petrol in cash. They have put it on the motor vehicles account. So we want a motor vehicle account. Then the motor vehicle expenses. So we have a vehicle expense account also. Okay, so we'll see how do you correct it. $50 was paid for petrol in cash, which was entered in the vehicles account rather than vehicle expenses account, right? So I have a correct double entry here. And I have a wrong double entry here, right? So what's my correct double entry? I have paid for petrol, which is a motor vehicle expense in cash, right? So expenses are debited, no, so it should be motor vehicle expenses account debited by 50, right? And then I'm paying in cash, so it should be cash account credit by 50. Then what's my wrong double entry? Instead of doing it like this, instead of motor vehicle expense, I have gone and put it under the motor vehicles account as $50. And cash is the same, and that's correct, right? That I have done correctly. Then how do you correct this? How do you correct this? So I must first of all record the wrong double entry. So motor vehicle I have debited by 50 and cash I have credited by Cash I have credited by 50, right? This is my wrong double entry, right? So what is my wrong account here? Motor vehicle account is wrong because I should not use motor vehicle account because it's not a motor vehicle. No? So I had to remove from the wrong account. Removing means motor vehicle account credit, right? I'm removing it. And then I must put it to the correct account. What is my correct account? Motor vehicle expenses is the correct account. Right. Then what is my double entry? I remove from motor vehicle, so which is motor vehicle account credited by 50 and I put it to the correct account. That is my motor expenses or vehicle expenses. Okay. Then there's a purchase of a motor van for 2000 that was entered in the motor expenses account, right? So I'll take the question to the other side, then it's easy for me to explain. So here also we have cash account. Then we have a motor van account. Then we have a motor expenses account, right? So we'll try to figure out what's the correct double entry and what's the wrong double entry. Correct double entry, wrong double entry, right? You're purchasing a motor van for 2000. That's the correct double entry. So if you're purchasing a motor van, it should be motor van account debited by 2000 and cash account credited by 2000, right? That should be my correct double entry. But I have done a mistake. Instead of putting it into the motor van, what have I done? The purchase of a motor van for 2000 was entered in the motor expenses account. So instead of using motor van, I have used motor expenses account and debited that 2000. Cash is the same. Cash account I have credited by 2000. Right? That is nothing wrong. Then how do you correct it? So we'll first of all put the wrong double entry. Motor expense account debited by 2000. This is what they have done, which is wrong, right? I have to remove this now. This is my wrong account. Now, in this case, motor expense is the wrong account because it should be a motor van, but I have put it under the motor expenses. So, remove from the wrong account. Removing means I should credit the 2000, right? I should credit the 2000 to remove it. And then I must put it to the correct account. What is my correct account? That is motor van. Motor van is 2000 debit, right? Remove from the old account, put it to the correct account, right? That is what I have done here. Cash account is still the same, 2000, nothing to worry, right? Cash account is still the same, nothing to do about it. That's the correct account. But motor expense is wrong, so I remove from motor expense, put it to the motor van. So how do I correct it here? Removing from motor expenses means motor expenses account credited by 2000. Putting it to motor van means motor van account is debited by 2000. The next one, the sale of office equipment for $90 was credited to the sales account, right? So normally once you're selling, you're getting money, so it's cash account that usually works around this. So we'll try to correct this also. For that, I will use two accounts. Okay. So first we have to identify what is the incorrect double entry and what is the correct double entry. So sale of office equipment for $90 was credited to the sales account. So once you're selling, you get money, right? So it should be cash account debit, and I'm selling a non-current asset. So it should go to my disposal account as credit. But instead of putting it to disposal, I have credited my sales. Cash account is anyways debit. But instead of putting it on a disposal, I have put it as sales account credit. This is the mistake. So what are the three accounts we want here? We want cash, we want sales, and we want disposal, right? Cash account, we are getting money anyway, so we have debited 90, nothing wrong with that, right? We have debited 90, which is nothing wrong with that. Now we have to understand what's the mistake. Sales account, they have credited by 90, right? They have credited by 90, which is wrong. So I must remove it from the wrong account. Removing means I should debit 90. And removing means I should debit 90. Then I must put it to the correct account, which is disposal account, credit by 90, right? Remove from the wrong account, that means I remove from the sales, put it to the disposal. That is how I correct this error. So in this case, what's the wrong account here? Sales. It shouldn't be a sale, so this is my wrong account. I remove from the wrong account, put it to the correct account. Then what's my double entry? I remove from sales means sales account is now debited. Then I put it to the correct account, which is disposal account credit. Right.